Hello everyone, this is Deepika SR. In this video, I'll be explaining about the two most popular stock market terminologies, the bull and bear. So what is a bull market? If a price of a share keeps increasing, it is said to be in a bullish trend. Similarly, if a price of a share keeps crashing down, then it is said to be in a bearish trend. But have you ever wondered why it is called so? Have you observed a bull attacking its prey or its enemy? A bull always uses its horns to attack its enemy by throwing it up in the air. And this is why, if a price of a share keeps increasing, it is said to be in a bullish trend. A bear always attacks its enemy or its prey by pushing it down to the ground. And this is why, when a price of a share keeps crashing down, it is said to be in a bearish trend. Interesting, isn't it? Now, let's see an example. The share price of Yes Bank is trading at 26 rupees and 60 paise today. This chart presents the share price performance of Yes Bank for the past 5 years. So if you look at the chart, the share price of Yes Bank was trading at around 160 rupees in the year 2016. The price swiftly kept rising and it recorded its highest price of rupees 394 in the late 2018. This rise is a clear example of bullish trend. But suddenly, in the year 2018, the share price started crashing rapidly. This was because Yes Bank was in news for a bad reason. The bank had a lot of NPAs and the bank's management failed to disclose the same. So what is an NPA? It refers to non-performing assets. So if you look into the bank's balance sheet, you will notice that the deposits that the bank collect are put under the head liabilities because the bank is liable to repay the money back with interest when the depositor demands it. Whereas the loans that the bank gives are the assets because it generates income to them in the form of interest. So when these loans are not repaid in time by the borrowers, they are said to be non-performing and so are called as NPAs, non-performing assets. Because of this reason, the share price of S Bank kept falling. And at one point, it touched an intraday low of almost rupees 5. So what more good example do we want for a clear-cut bearish trend? The share price of Yes Bank fell all the way from 395 to rupees 5. The next example is a Nifty 50 index. Nifty 50 is the most popularly tracked index of National Stock Exchange. This chart presents the performance of Nifty index for the past 5 years. Nifty right now is trading at 9,154 points. If you look at the chart in the year 2016, Nifty was trading at 7,000 points. It gradually kept rising, indicating a clear-cut bullish trend. And in the month of Jan 2020, Nifty was trading at its all-time high of around 12,300 points. But suddenly, it crashed rapidly in the month of February and March. It fell up to 8,000 points. It took 4 to 5 years for Nifty to reach from 7,000 to 12,000 points, but only just 2 months to fall back to 8,000 points. And we all are aware of the reason for this fall. Of course, the pandemic coronavirus, because of which companies all over the country have stopped their operations. This has led to a great panic in the market because shutting down operations will affect production, which in turn will affect sales and profit margin, and eventually the dividends and the share price of the company. As the share prices of the top 50 companies crashed, the Nifty 50 index also crashed, thus indicating a clear-cut bearish trend. So I hope by now you're clear about the concepts bull and bear. That is, when a share price of a company or an index keeps going up or rising, it is said to be in a bullish trend, whereas when it keeps crashing down, it is said to be in a bearish trend. But do you wonder what this Nifty is? And you keep hearing about this Nifty and Sensex all the time in the news channels. If so, then please watch the next video. Thank you. Please don't forget to subscribe the channel and share the video with your friends and relatives. Thank you for watching. Have a good day.